The stock market may be sitting at all-time highs, but if you think this is the end of the run, think again. Time and again, whenever Wall Street gets hung up on stretched valuations, macro headwinds, or the next inevitable pullback, a fresh tailwind comes out of nowhere to blindside the bears and launch the market into its next surge. History makes one thing clear: the most powerful rallies often take shape not in smooth, worry-free conditions, but when uncertainty keeps the majority of investors on the sidelines. That's exactly the setup we're seeing now. Inflation fears, sticky interest rates, and geopolitical tensions still dominate the headlines, yet the S&P 500 continues to climb, powered by resilient earnings, AI-fueled growth, and surprise policy developments. As Fundstrat's Tom Lee recently said, the setup for the second half is one of the best we've seen in years, what investors call a most hated bull market. In other words, when sentiment is this skeptical, even modest positive surprises can unleash outsized gains. This matters because inflation is cooling faster than expected, opening the door for rate cuts, while earnings revisions are turning higher for the first time in months. Add in potential catalysts like a US-China trade breakthrough, and you have the recipe for a liquidity and confidence surge few are prepared for. And while most investors are busy chasing the obvious, hype-driven names, the real opportunity may lie with under-the-radar companies sitting at the crossroads of secular growth, macro tailwinds, and institutional demand. In the next segment, we'll look at 3 such stocks, overlooked by the crowd, but perfectly positioned to ride the powerful forces driving the next phase of this rally. First on the list is Astera Labs Inc., ticker symbol ALAB, a company that has quickly become one of the most exciting names in the AI infrastructure space. Astera isn't designing the GPUs themselves, it's building the critical high-speed connectivity solutions that make modern AI servers possible. Its portfolio spans PCIe retimers under the Aries brand, active electrical cables in the Taurus line, CXL memory controllers known as Leo, and the Scorpio family of fabric switches. These are the components that ensure data can move rapidly and reliably between chips inside AI clusters, removing bottlenecks and unlocking the full performance of advanced processors. The company's Q2 FY 2025 results left little doubt about its momentum. Revenue hit $191.9 million, up 20% from the prior quarter and well above guidance. Importantly, this growth wasn't tied to a single hit product, it was broad-based across multiple segments. Scorpio switches already account for more than 10% of sales. Taurus cables are seeing surging demand in AI rack-scale deployments, and Leo memory controllers are progressing from pre-production into volume shipments. On top of that, Astera deepened its collaboration with Nvidia to support NVLink Fusion, a key interconnect technology for the next generation of GPU clusters. Looking ahead, management has made it clear. The second half of 2025 will be transformative. All 4 product families are set to ship in meaningful volumes, tapping into a total addressable market that's expanding as hyperscalers ramp AI-related capital spending. Industry forecasts from Dell'Oro and McKinsey suggest AI-centric data centers could account for the vast majority of new capacity growth this decade, creating a multi-year runway for Astera's solutions. What makes this even more compelling is that Astera is steadily reducing customer concentration risk while expanding its product mix, strengthening its foundation for sustainable growth. In short, Astera Labs is positioned at the heart of one of the most powerful secular trends in technology, with the right products, partnerships, and market timing to capture a significant share of the AI infrastructure boom. Next up is Marvell Technology Inc., ticker symbol MRVL, a company that's become one of the most critical yet underappreciated players in the AI semiconductor landscape. While most of the spotlight in AI hardware goes to GPU giants, Marvell is building the high-performance custom silicon, memory, and connectivity solutions that make large-scale AI possible, and it's already shipping them to some of the biggest hyperscalers in the world. At the core of Marvell's business is its custom XPU and XPU-attached solutions. These aren't off-the-shelf chips. They're tailor-made architectures co-designed with top-tier cloud and AI customers to deliver optimal performance for their specific workloads. This deep collaboration means Marvell's technology is woven into multi-year product roadmaps and locked in for production cycles well beyond 2026. With 18 active AI sockets, 12 at the largest global hyperscalers and 6 at emerging AI companies, Marvell isn't betting on future wins. It's already executing on real revenue-generating contracts. Its engineering edge is another differentiator. Advanced packaging with RDL interposers, custom SRAM for higher bandwidth and lower power consumption, and in-package voltage regulation that boosts efficiency while reducing electrical noise, these are not trivial add-ons. They're hard-to-replicate technologies that reduce system footprint, improve energy efficiency, and increase compute density, all of which are essential as AI workloads scale. The market opportunity ahead is massive. Marvell recently raised its AI data center total addressable market forecast to $94 billion by 2028, and management is aiming for a 20% share. That could translate into more than $18 billion in potential revenue, compared to under $6 billion today. With AI data center spending growing at double-digit rates and demand for custom silicon accelerating, the next 3 years could mark a significant growth inflection. What makes Marvell especially compelling now is that the market still isn't fully pricing in this upside. The company is already in production, already diversified across customers, and already positioned at the heart of AI infrastructure build-outs. In an environment where execution matters as much as vision, Marvell is delivering both, making it a standout in the race to power the AI revolution. Rounding out the list is Micron Technology Inc., ticker symbol MU, a company that's proving it can be both a leader in memory innovation and one of the most attractively valued AI infrastructure plays in the market today. Despite delivering stellar results and unveiling cutting-edge products, Micron is still priced as if the AI boom barely applies to it, with a forward PE near 13 and a forward price-to-free cash flow ratio around 7. That kind of valuation for a company this deeply embedded in AI-driven data center growth is rare. Micron's recent quarter was a standout. Revenue surged 37% year-over-year, while earnings per share more than tripled, crushing analyst estimates on both the top and bottom lines. Its flagship DRAM business posted over 50% annual growth, and demand from hyperscale data centers remains a primary driver. The company's balance sheet is strengthening as well, with more cash, higher tangible book value, and lower net debt, all of which give it the firepower to keep investing heavily in R&D. And R&D is where Micron shines, consistently pushing new technologies to market ahead of competitors. The latest example is its new PCIe Gen 6 SSD for AI data centers, the first of its kind in the industry, featuring industry-leading capacities, ultra-low latency, and powered by Micron's next-generation G9 NAND. This isn't just incremental innovation. It's a product aimed squarely at the fastest-growing segment of the storage market, with the data center SSD industry expected to grow at over 24% annually in the coming years. With cloud providers and AI companies pouring billions into infrastructure, Micron solutions are positioned to become a core part of next-gen AI training and inference environments. While competition from giants like Samsung is real, Micron's execution, product leadership, and ability to align with secular AI and cloud trends put it in a strong position to capture market share. In a market that often overpays for growth, Micron stands out as a company delivering both growth and value. If the market begins to fully price in its AI potential, the upside could be substantial, making Micron a compelling story for investors watching the next phase of the AI infrastructure build-out.